myself, Head of Investment Solutions at Bill Swiss. And today we're focusing on wealth advisory for entrepreneurs and family offices. Today's episode is all about helping ultra-high net worth individuals and families navigate the complexities of developing and making strategic investments, of monetizing illiquid assets, and generally making sense of an ever-evolving macroeconomic landscape. Joining me to discuss all of this today is Remy Savoya, Head of Global Advisory here at Bill Swiss, where we combine in one team financing and advisory capabilities for entrepreneurs and single family offices. Remy, welcome to the show.
Hi, Marianne. Great to be here.
So, Remy, let's just dive in. Entrepreneurs and family offices tend to have substantial assets, usually the company they founded or inherited. And one of the things that we come across, especially with the first generation, is they sometimes face challenges in converting this into liquidity. Another thing that we see is they sometimes also think about how to diversify without losing control of the operating asset. So in your view, what are some of the strategies that entrepreneurs and family offices can use to monetize this asset richness?
That's absolutely a key question. And that's also why we combined, when we set up the team, financing and corporate advisory within our team. One first way to do this is when, especially for first generation, when they own their business and they want to, give it to their children, and at the same time they don't want to lose control. So one way where we can help our client is to help provide financing against the value of the stake in their company. So that way they are not diluted. The leverage we provide against the company is limited and therefore quite manageable, and that helps them to diversify into other assets. That's one way to do it. It makes sense, especially if the client wants to keep control for himself and then for his children. Sometimes they just want to, sell or at least start to exit their business, and that's where we can move more into an advisory position where we help them to either find a new investor or even sell their business. What's interesting about those clients is that they, when they want to diversify, they're still quite keen to invest into other companies. And that's where being able to help them invest into private markets is quite helpful. So maybe back to you, Marianne, how do you guide them into such investments?
Absolutely. It's a key question. And I think it's not just about private markets, but generally investing in general. I think it really starts with having a view on the macroeconomic landscape. So that's one thing that's really important. Diversification is key. It's important to diversify across sectors and across different geographies. I think one thing also that is important right now is we are in a period of relatively higher interest rates, at least relative to what we've seen in the last couple of years. And this has an impact on cost of capital, but also on valuations. And that's why it's really important for clients to really focus on sectors where that could be more resilient to a higher cost of funding, of cost of capital. Which brings me actually to another topic, which is talking about financing, because in investing, you have to finance those investments. And I want to talk to you about what are some of the options that entrepreneurs or single family offices have if they're thinking about investing into, say, the private markets or public markets. How could they finance these investments?
Yeah, that's an area where we are quite active as well. And it really depends on the needs of the investor, whether it's, as you said, a single family office or an entrepreneur. We can really tailor the financing to their needs. So if it's more of a short-term liquidity need, then it's, in a way, a revolving line to meet those capital calls and then repay them as they see, as they get liquidity. That's one way. The other way, when there is a more permanent need to put leverage on those assets to either optimize the returns or invest into other asset classes, then we can put in place term facilities. Those are always bilateral lines done on a tailor-made basis for our clients. So clearly, being able to deliver on the tailor-made solution in a very discreet manner is key for those clients. We see that portfolios are always quite unique. So we have a mix of private equity in funds, but also in direct investments. We also see portfolios where we have a mix of private equity, venture capital, private debt, and that's where we, can analyze those portfolios and provide leverage against it. Usually, those clients are quite conservative in terms of leverage, so we are able to meet those financing needs ourselves. But we also have cases where their need is either more aggressive than our risk appetite, or also sometimes the underlying investment is outside of our risk appetite. And that's when we can play in the advisory part of our business, because we can switch that discussion into a debt advisory discussion where we help them find institutional investors who have risk appetite for this kind of investments.
That's an interesting point, talking about also bringing in institutional investors. I want to shift gears just a little bit and talk about the elephant in the room. I think, Remy, your activity is really focused on Switzerland and in Europe. And I think in Switzerland, one of the things that we've seen, which has been quite a big news in the Swiss financial industry, was the state-backed acquisition of Credit Suisse by UBS. And of course, I can imagine that this must have some ramifications in terms of the landscape. Can you talk to us a little bit about what you're seeing off the back of that transaction?
Yes, for corporate clients in Switzerland, it's clearly a major event. Up until a few weeks ago, it was mostly talk, but now we see the real effects happening. It's clearly concentrating a big part of the corporate and investment banking market in Switzerland, because they were the two most capable banks, clearly. On the one hand, it does bring more capabilities in one place. So I think some clients will benefit from even better service, better capabilities. On the other hand, the two banks had also some businesses that were different. Risk appetite was also different. So I think we'll see, and we are starting to see some cases where I think two scenarios happen. Either some clients are a bit concerned that they are too concentrated now with one bank. So they are, I think rightly so, thinking about diversifying. That's one example. And then there are other clients where they were more maybe with one bank, and the remaining bank is not always willing to continue the relationship to the same extent, or doesn't provide those services. So clearly, there's a big pickup in discussions happening, and we're happy to support our clients in this big topic.
Very insightful, Remy. I think if we look back over the last couple of years, there's been a general sense of macroeconomic uncertainty, especially if we look in Switzerland and Europe, which is the area where you mainly operate. There's been that sense of uncertainty, but it's just really amazing to see how resilient companies have been. If you think about what they've had to be hit with, higher inflation, driving up their cost of capital, and really increasing uncertainty. So off the back of this, I guess the question is, what do you look at when deciding to finance a company or advise a company?
Yeah, that's a very good question. I think first and foremost, it's the staying quality of the underlying business. So do they have an edge? Do they have pricing power, especially, as you said, in a time with significant inflation? Secondly is the quality of the balance sheet in terms of the level of debt. Clearly, although in Switzerland now rates are coming down, but in the rest of the world, rates are still very high. And companies with high indebtedness face higher interest expense, but also another key issue is refinancing risk, because lenders are more conservative. Cash flow generation is key. So we do a lot of stress testing on cash flow generation. And I think and I'd say the last point, and it's ever more important, is the quality of management. Will they be able to adapt in this business world that is changing all the time?
Those are excellent points, Remy. So as we wrap up, what final advice would you have for single family offices or entrepreneurs looking to thrive in this market?
Yeah, just make the connection to what I just said. Over the last few years, it's quite incredible the level of volatility and disruption that we see between outside events, but also the advent of AI, which is a big change for many of our clients. So if I had one word of advice, I would say the really have good quality management and good governance in your business. That for us is a key success factor. For two reasons. One is obviously just the quality of the people, but also having such people means the business owner can really delegate. And as a result, he or she can really focus on strategy and thinking forward and try to see the disruption that will be coming. And for me, that's really the key between, medium term continue to be very successful or, lose your edge and become irrelevant.
Thank you so much. So to all of our viewers, entrepreneurs and single family offices who are watching this show, there's two things to take away. Good quality of management, as you said, and good governance. Remy, thank you so much for joining us. It's been a pleasure to have you.